Taking a look here at Harmony 1, it's had a big beat down ever since it fell down below that rising wedge that's visible on the 3-week and the weekly chart, and the daily as well, now that I think about it. But you can see on the current 3-week candle, which ends when this 3-week candle, this is the last week of the 3-week candle. And then the next one opens up on the 7th of March, so in roughly 5 days from now. But that 3-week candle is, I don't know about you, but it looks like one that's fairly bullish as far as how you would interpret it. But from an Ichimoku perspective, we don't have a full suite of indicators on here, so it's hard to get a good read on it. But we do know, and we can see that it is below the Tenkan-sen and the Kijun-sen. Excuse me. Zipping on over to the weekly chart, I think we're about to see at least a mean reversion set up to the 25-cent range. And the reason I'm saying that is because, by the way, this is actually a good view of how the Kumo twists work in the Ichimoku system. You got a Kumo twist over here that was a swing high, and then you had prices sliding down, and you had this scan death cycle, the 7-week cycle, likely to see a little bit of a bounce here. But the RSI is still in bull market territory. I don't know why I have it sitting there but it's in between 50 and 40, which are the two oversold conditions in bull market. The composite index is here as well. There's a slight, no, I take that back. No, actually there's some slight hidden bullish divergence here. You have these lower closes and lower lows, but you have higher lows in the composite index. Very, very slight difference between these two troughs. So this is a higher low, the one that was formed last week, but the corresponding candles are of those troughs are different. So you have higher lows in the oscillator, lower lows in the candlestick chart. That's a sign of hidden bullish divergence, which is the thing you want to see in a pullback that lets you know that the uptrend is likely to continue. Is it going to go full-on bull mode and break out again into a new all-time highs? We'll see, but definitely probably should see a mean reversion around that 25-cent level here coming up. And then on the daily chart, see a pretty steady rise here, but it's facing some pressure up against that Kijun-sen, and just a lot of reasons to be a little worried about if it can keep accelerating higher. What it really needs to do is close around that 17.5-cent range in order to really reduce a lot of the worries about further downside potential. And there is some here. I mean, there's one thing that is good is that the rise here has been pretty substantial over a short period of time, but that has not translated into some type of bearish divergence at all. When you compare the peaks in the composite index, there's still lower highs. Same with price, but if it does move up higher, it could create hidden bearish divergence, which would likely tip it further south again. Key zone for it to tackle is that 17.5-cent range. If you want to look at some resumption of higher prices, that's where it needs to go. Otherwise, looks like it could be poised for some lower moves. And as far as where it would go, get the visual range there. Scrolling out. Oops, there we go there. Trying to get the chunk of this here. Actually, it might have a little bit of a choppy ride south if it does go, because there's quite a bit of volume that's traded through all those levels. So, but definitely in the short term, I think a return to test 14.25. That would be the next zone. But again, 17.5 cents is the close on the daily chart that we would need. And then from there, upside potential probably capped around that 22-cent level, bottom of the cloud. And we'll see what happens. I'll update it as needed. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like, comment, and subscribe.